beleaguered telco Vodafone Idea's recent 45,000 crore rupees fundraise announcement failed to enthuse Dalal Street, with the stock crashing 14% intraday on February 27. The company plans to raise the said amount via equity and debt to expand its 4G coverage, roll out 5G network, and improve its competitive positioning. Of this, 20,000 crore rupees are aimed to be raised via equity instruments by June this year. This also includes 2,000 crore rupee promoter funding promised in August last year. Meanwhile, its parent company and second largest shareholder, Vodafone plc, is looking to sell its Italian business to Swisscom in an attempt to simplify the telecoms group. Investors back home were left disappointed as Vodafone Idea gave no details of new equity partners that the street was expecting. The plan was thus similar to previously passed resolutions that Vodafone has consistently failed to meet, analysts said.
Vodafone's fundraise announcement appears very ambitious to us. So the company had attempted a fundraise of 250 billion in 2020 September. It couldn't raise the funds as the promoters didn't infuse enough capital and investors were jittery of the company's high leverage. In fact, the company, despite a tariff hike, despite more subscribers migrating to 4G, has similar revenues quarterly basis as it had in 2020 end. So we think that the company will struggle to raise the committed funds that its board meeting or board resolution has promised.
Analysts at CLSA also note that Vodafone has been in talks with potential investors, but fundraising has remained elusive. Thus, they expected to face a financial crunch again in 2026 when its annual spectrum and HVR payments become due. Its annual obligation post the end of the government moratorium in FY26 would be 43,000 crore rupees against expected EBITDA of 8,400 crore rupees, which is a significant risk as per Motilal Oswal Financial Services. The significant cash needed to service debt leaves limited upside for equity holders. Given the current low EBITDA, servicing the debt without external funding will be challenging, the brokerage says.
Vodafone as an investment is very risky given the high leverage, the low chance of them being able to raise funds, and investors can instead stick to safer investment avenues like Bharti Airtel, which has much lower balance sheet risks, is growing faster than Voda Idea and benefiting from its speed.
Most brokerages have kept reduced and neutral ratings intact on the stock after the development, with an average downside of 50%. Thus, a concrete layout of the planned fundraise from new investors and promoters will be washed out in coming months. Today, Dalal Street will eye global cues and the Q4 GDP data.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.